September 12th, 2008. It's just another Friday morning on Wall Street, until it isn't. Inside the towering headquarters of Lehman Brothers, the mood is icy. Traders are silent. Phones ring, unanswered. In less than 72 hours, one of the most powerful investment banks in the world will be gone. This isn't just the collapse of a company. It's the moment the world realized the global financial system was built on sand. Lehman Brothers was founded in 1850 by German immigrant Henry Lehman. What started as a cotton trading business in Alabama grew into a Wall Street powerhouse. It survived the Civil War, the Great Depression, even 2 world wars. By the early 2000s, Lehman had transformed into a $600 billion investment bank. Its profits? Massive. Its confidence? Unshakable. Its risk appetite? Dangerous. In the early 2000s, Lehman went all in on real estate. The U.S. housing market was booming, and subprime mortgages, loans to high-risk borrowers, were everywhere. Lehman didn't just invest, it became a machine, packaging these risky loans into mortgage-backed securities and selling them as safe bets. But behind the scenes, that gold was starting to rot. By 2007, defaults on subprime loans were rising fast. Panic started to spread. In March 2008, Bear Stearns, a major investment bank, collapsed. The warning signs couldn't be clearer, but Lehman's leadership, led by CEO Richard Fuld, refused to scale back. They doubled down. Internally, the firm was over-leveraged. It was borrowing over $30 for every $1 in equity. That's not banking. That's gambling. Friday, September 12th, 2008. Lehman's stock price is in freefall. Investors are pulling out. Fast. The U.S. Treasury summons the heads of major Wall Street firms. They try to find a buyer. Bank of America backs out. Barclays wants to buy until UK regulators say no. By Sunday night, there's no deal, no bailout, no savior. At 1:45 a.m., Monday, September 15th, Lehman Brothers files for bankruptcy. Over $600 billion in assets vanish into thin air. The largest bankruptcy in U.S. history. The collapse sends a shockwave through global markets. The Dow plunges 500 points in a day. Banks freeze lending. Investors panic. Within weeks, iconic names like AIG and Merrill Lynch are in crisis. Congress approves a $700 billion bailout. Not for Lehman, but to stop the next domino from falling. The damage is done. Jobs are lost. Retirement savings wiped out. Homes foreclosed. Lehman Brothers didn't just collapse. It exposed the rotten core of a financial system addicted to risk. It taught us how quickly confidence becomes crisis, and how the decisions of a few can wreck the lives of millions. It's been more than a decade. But for many, the story of Lehman never ended, because the next collapse might already be brewing. If you found this story gripping, subscribe to Seymour Investment for more financial documentaries and untold market stories.